You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hi, Jim.
People are wondering right now in the markets, how can you benefit from precious metals? And you said to win, focus on the current leaders. That's
really important. We want to be looking at the gold miners and near to producers that are going to be around and profit from the next upswing in the cycle, which is trying to assert itself today. And the nice thing about it for us is that there are hundreds of companies that a couple of years ago were listed that are not even contenders anymore. Some of them have gone bankrupt. Some of them are moribund trading. Some of them they're trading at a fraction of a cent that used to trade at $1. And so we can go in with a lot less time spent and more effectively look at the winners, the ones that are strong now, that have a good cash flow, that are proving up more resources, that have increased production, perhaps that have been added to a new index like the Sprott Gold Miners Index, and that can give us greater confidence that most of what we're looking at are going to be winners, and we can spot the ones that don't have much chance right away and avoid those like the plague.
You said the Sprott move was a very positive thing for the market.
I think it was. This is the Sprott Gold Miners Index, and that ticker is SGDM, Sierra Golf Delta Mike. And, you know, we usually don't talk about companies on the show by name, but I think this is appropriate to talk about this index. I think it's one, even if a person didn't buy the index but went in and looked at some of the companies that Sprott chose, I think they would be looking at a stable of winners, because they looked at the companies that were profitable, and they rebalanced the thing every quarter based upon the profitability of these companies. So a company that improves its profitability from the preceding quarter is going to get a bigger weighting in that index than it did before, and if the profit went down, it would be less. So they're continually reweighting these companies, and if there are some losers, they're not even going to be in the index, and if they don't do well, they're going to have a smaller weighting. So that would be another way that somebody doing their due diligence could go in, and if they had the company they were watching and they saw that over a couple quarters it got a smaller and smaller amount in the index, that would indicate that Sprott didn't feel that they were as profitable as they were before. And that could give them information as to whether or not they might want to hold that company.
You said it's very important to manage risk. We all know that. But you also said it's very important to be active in this volatile market.
I think it is, you know, and I'll tell you, if there's somebody out there that's not afraid, I think they're just not being honest, because I'm afraid. But you know what? I take the fear as best I can, and I turn it into productive action. And so I'm looking at this, and I believe that by buying now and adding to my position into weakness, that when things turn around, which they will because they're cyclical, this mining business is cyclical, that the companies that I buy today at a good value and a good price will give me a good return that will be commensurate with the risk that I'm willing to take. And the key on this, I feel, is to buy only into weakness, to really target the companies that you want, and to make sure that you always have some money left in case they go a whole lot lower than you expected. There's a view out there that we could see a wash out something similar to 2008, where all the markets collapse over the next month or two and take everything down with it, like what happened in 2008. And if you remember, everything was slaughtered during that time frame when that did happen. But what was interesting, the only one of the very few categories that ended up on the year after all of that was gold. It was up 4%, which doesn't sound like much, but when you consider that a lot of other categories were down 20% by the end of the year. So I think that where we are with the quality miners, not just across the board, but the quality ones, if we should see a worst-case scenario like that, in my view, I think what will happen is, yes, these companies will decline, but they've already declined a lot, so the decline will be cushioned, and they'll do that begrudgingly. And if they go down sharply, it'll be like a beaker, where they go down and they come right back up the other side very quickly, and they won't have those crazy, stupid prices for very long. So if you can pick the ones that are still going to be around and are going to be profitable, and if you can buy carefully on the way down and save a little bit of money for that ridiculous price if we get it, I think you're going to be richly rewarded over going into next year.
CBS's 60 Minutes did a nice little feature story about individual gold miners in the Yukon. But is this going to see a rush of people going, oh my God, there's another gold rush in the Yukon like there was in the 2 centuries ago now? And would people rush there, or are you just a fool to rush in?
Well, Jim, I've been up there, and I was up before this current rush got started. That happened got underway 4 or 5, 6 years ago, and all these companies went up, and there was great fanfare, and a lot of people bought into the companies, and most of those companies either went bankrupt or are trading on life support. There are just a couple now that are what I'd call last men standing, and one that I follow particularly and have shares in won't be probably producing for 3 years, even though they've identified several million ounces of gold that they feel is, commercially recoverable. The seasons are very short up there. The climate is harsh. You're talking about very small amounts of deposit of gold in any given area unless you luck out and find a hot spot. I think the placer miners probably, even today, probably have a better chance of doing well than the companies that go up and hope to get this gold that is precipitated up from bedrock parts per billion. So I would be very surprised to see a gold rush developing on the part of big companies or even small ones like what we saw 5 or 6 years ago, let alone back in the Klondike days. But it's just, I think for me, there are more interesting areas in the world, having seen what the tribulations and trials are for trying to make money up there. And I know the main person that they profiled, I've always had a lot of respect for him, was Sean Ryan, who has been able to get a lot of land under his auspices there and lease out land once they do this proprietary testing method to find out if there's enough gold there to take a second look. And I think that he richly deserves whatever he gets from this, which is going to be substantial. But I think the risk for an average investor going in with an untested exploration company where they're going to need continual refinancing and dilution of their shares if they don't find something right away, I think is very, very high risk, not to mention the pushback that they're going to get from the First Nations in terms of trying to preserve their own land about it. So I think it's going to be a hotbed of complexities, and I think it's going to be very, very high cost of doing business, really.
And in the original Yukon Gold Rush, only 1 out of 10,000 men who went there actually were very successful.
Well, that's true, and it doesn't mean that there won't be 1 or 2 companies that go up there and strike it big and somebody makes 10 or 20 times their money. But I'll tell you, the risk is great for a shareholder and the risk is great for an exploration company. And all I can say is I wish them luck. And, sometimes it might be better to go up there with a gold pan and do your best in the placer deposits rather than trying to go out and find this stuff where you have to drill thousands of different test beds in order to see what you've got.
David, thanks a lot for chatting with us.
You bet. It's been good speaking to you, Jim.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. We're also on YouTube. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.